Filinvest land stands at a crossroads, transforming from a traditional property developer into a business engineered for lasting income and resilience. The first quarter of 2026 tells the story of this transition, where familiar strengths meet new realities shaped by capital and discipline. Revenues climbed modestly to 6.02 billion pesos, with net income reaching 1.10 billion pesos, a 3.5% lift from last year. These headline numbers may seem unremarkable, yet beneath them is a company rebalancing how it grows. Real estate sales remain the lifeblood, up 6.1%, driven by collections and project completions. But it's the composition of sales that signals Filinvest's true focus. Not luxury towers for the elite, but homes for the middle class, first-time buyers, and provincial families, those whose fortunes mirror the broader Philippine economy. Yet, development comes at a price. The cost of sales is rising faster than revenues, nudging residential margins downward. It's a margin still generous by industry standards, but in this environment, direction matters as much as the figure. Enter the second engine, rent. Leasing revenue grows more slowly, yet more steadily. Office rents softened, but malls picked up the slack, reflecting broader market shifts in a post-pandemic landscape. Crucially, leasing margins improved. That kind of operating discipline is vital when large investments in malls and offices are tied up, waiting to deliver returns over time. Behind these numbers sits a formidable balance sheet. With 88.92 billion pesos in investment properties and 74.40 billion pesos in inventory, Filinvest is built for the long game. Both assets promise future cash, but demand patient funding. The company's leverage remains balanced, not excessive, but a constant presence. With bonds now yielding 7.4%, every project must earn its keep. Debt is no longer a silent partner. It now dictates pace and priorities. Cash flow offers reassurance. Stronger collections and tighter working capital lifted operating cash, even as investments and repayments drew down cash reserves. This is Filinvest's operating rhythm. Generate cash, reinvest, and repeat, all under the watchful eye of creditors. The strategic blueprint now resembles a barbell. Residential development brings higher margins, but cycles up and down. Leasing is slower, yet steadier, anchoring recurring income. Success depends on managing both fronts with discipline and agility. The takeaway? Filinvest land is proving it can adapt and endure, but the margin for error has narrowed. Growth now demands not just ambition, but financial precision. In today's market, land represents optionality, while debt demands discipline. Filinvest must harness both to turn the Philippine property cycle in its favor, and investors will be watching how nimbly it walks that line.